In a city where overall real estate prices are stagnating and in many cases dropping, there's a hidden pocket of the city that's seeing tremendous price growth. We are talking upwards of 10.4% year-over-year increase in pricing. Where are these neighborhoods and what's fueling this price growth? Join us. For the next few minutes, we're going to be breaking down the Toronto real estate numbers from September 2023, and we're going to get into just why some of these neighborhoods are seeing massive price growth, whereas the rest of the city is stagnating, or in some cases, prices go down. But before we get into that, make sure to hit like, smash subscribe, ring that little notification bell to make sure that you're not missing other market updates just like this one or any other under the radar real estate content that we're putting out on this channel. All right, so let's jump into these numbers. So as mentioned, these numbers are from September 2023. We are now October. We are looking to see what happened last month. So sales were down last month. We're talking 7.1%, a drop of almost 300 sales versus last year. New listings were up 44%. Active listings also up 40%. These are two very important stats, which we're going to get back to in just 1 minute. And then when we look at price was up 3%. However, we like to look at the HPI, the composite index, because it's a bit more of a smoothed out version of the stats. When we look at the composite index for the GTA, price was up 2.4%, and in the city of Toronto, prices were just over 1%. However, with the composite numbers, they're actually trending down month over month. So they kind of hit the peak earlier this year, and they've been going down month over month. So why are these numbers continuing to move down? Well, number one, obviously, is that we're in a rising rate environment. So clearly that is affecting the market. But number two is that it's almost a symptom of the rising rates, is we're seeing a lot of listings hitting the market. So let's look back at those numbers of new listings and active listings. So with new listings up 44% and active listings up 40%, that means there's a lot more supply on the market. So let's look at some of the advanced metrics that us realtors use to give us an idea of kind of where the market's at right now, where it might be headed. The first advanced stat that we look at is SNLR, so sales to new listings ratio. So what this is, it gives us the amount of sales that are happening versus the amount of new listings hitting the market. So right now we're sitting at about 47%. So 47% of new listings are being sold. So when we saw the market moving at a quick pace, when things were flying, properties are hitting the market, selling within a couple of days, we saw that SNLR percentage upwards of 60-70%. So 60 to 70% of new listings were selling. Now we're down below kind of the 50% threshold. So 50% is like a balanced market. We're now just below that, meaning that we're now slightly into buyer's market territory. Other advanced stat that we like to look at is MOI, or months of inventory. Right now we're sitting at about 2.5 months of inventory. What does that mean? So if there were no more new listings to hit the market at this point going forward, it would take 2.5 months to sell off all that inventory. Generally, 3 months, some places may say 4 months, is kind of where the balanced market's at. So if you hit kind of 3 months, we're in a balanced market. Once you get past 3, then you start dipping into buyer's market territory. So we're trending in that direction, because for years, I've been in real estate for years, and that number's generally been under 2 for a long time. So now we're surpassed 2, moving upwards. It'll be interesting to see what happened. But if SNLR, which is a bit of a more of a leading indicator, is already showing buyer's market territory, I would expect that months of inventory number to also move a little bit higher. So what does this mean for the rest of the fall market and moving into 2024? Now, I'm not here to make predictions about what's going to happen, but if we look at the overall kind of state of the economy, bond yields are moving upwards, which affects fixed rate mortgages. So fixed rate mortgages are still moving up. So we're seeing mortgage rate with 5-year term approaching 7% in many cases. I think I saw on like a 1-year fixed rate, something like the mid 7s. So it's becoming more and more expensive to finance a home, which is affecting the market. It's also that people on variable rate mortgages are also getting affected by this. And that's probably one of the other reasons why we're seeing inventory kind of push up a little bit. So My take is that moving forward looks like we are heading in towards, if we're not already in a buyer's market. I mean, anecdotally with my buyers, it really feels like there's a lot more options for them and they can kind of take their time. So feels like we're in a buyer's market right now. We'll likely be in a buyer's market for the rest of this year. And then depending on what type of either intervention or non-intervention from the central banks or governments will kind of dictate where we move forward from this point. But on that note, as stated earlier in this market update, there's a certain pocket of the city that's completely defying everything that's happening in the market right now. So most neighborhoods, when we look at them, are either flat in terms of price or slightly down in year-over-year price. But this one pocket of the city is seeing price growth from anywhere from 4.5% all the way upwards of 10% year over year. And no surprise, it's the 4 neighborhoods that we have been talking about on this channel for months. Sometimes it feels like I'm screaming into a vacuum and no one's listening to me, but this pocket of the city is still seeing tremendous price growth. So it's the northwest pocket of the city. It basically follows Eglinton West and up into Weston. So these neighborhoods are defined by TREB as W09, W04, W03, and CO3. CO3 is what we're going to focus on today. CO3 saw year-over-year price growth of 10.4%. So where is CO3? So CO3 has a few kind of distinct neighborhoods. When I name them, you'll probably get a better understanding of where it is. So it's roughly bounded by Dufferin in the west, St. Clair south, Eglinton north, and about Avenue Road in the east. So these neighborhoods, we're looking at Oakwood Village, Cedarvale, St. Clair Village, a little bit of Forest Hill. So that kind of what encapsulates CO3. So what's fueling the growth in CO3? Why are we seeing all this crazy price growth year over year in this pocket? Well, number one is something, again, we've been talking about this channel nonstop, is the Crosstown LRT that's going to be cutting right through that neighborhood. The Crosstown LRT, as you said multiple times, creates a better connection to the rest of the city and more specifically into downtown Toronto. Commute downtown in no time from that neighborhood. Second thing that's kind of fueling some growth there is the growth and change we're seeing in Oakwood Village. So the stretch of Oakwood from St. Clair upwards to about Rogers Road, we are seeing tons of brand new restaurants and shops and bars, which is kind of converting this stretch of Oakwood almost in the same way that we saw Ossington change or Dundas West change over the years. So that's also attracting a lot of new younger buyers, younger families to the neighborhood. People that perhaps maybe were looking to live near Ossington or Dundas West, they're looking a bit further north towards Oakwood because it's giving them kind of those same neighborhood amenities and same vibe that they were looking for in some of those downtown neighborhoods. But then the third reason why, in my opinion, I think this is the most important reason why this neighborhood is seeing such tremendous growth, is that it's quite literally sandwiched between 3 of the most expensive areas in the city to buy a detached house. So we're talking neighborhoods of, let me just pull it up on the map here so we can all see them. So we're talking the neighborhoods of CO4, C10, CO2. So these areas encapsulate neighborhoods such as Lawrence Park, the rest of Forest Hill, South Hill, Witchwood, Davisville Village. So these neighborhoods, to buy a detached house in some of these areas right here, you're looking from anywhere from 2.2 million upwards of 3 million versus the average in CO3 of 2 million. So you're getting a savings of at minimum $200,000 upwards of $800,000 to buy in CO3 versus these other 3 neighborhoods that all abut CO3. So if you're a buyer with a budget wanting to be in one of these other 3 neighborhoods, you're perhaps looking a little bit further west, or maybe a little bit further north, to get into a neighborhood that might be a bit more affordable, that also has, and it's clearly showing, has tremendous. So, as you can see, Toronto's real estate state is very complex, right? So, for the most part, we're seeing very stagnant growth, things not moving, but there's still areas of the city that are kind of beating the overall market. In the last market update, we call these inflation-busting neighborhoods because they're seeing growth over and above what the overall market is giving you. And that's because the city of Toronto is still moving and growing, and people need places to live. People who are still looking to buy real estate in the city of Toronto are starting to wisen up to these areas and looking at them as an affordable option to either invest or to plant roots, start a family, or expand their family in these neighborhoods. So that's it for our market update for today. If you're interested in any of these neighborhoods, certainly hit us up. If you're interested in the overall city of Toronto, me and my team would be more than happy to be a real estate resource to either buy, sell, or rent anywhere in the city of Toronto, especially in some of these under the radar neighborhoods we talk about all the time. So that's it for today. Again, remember to like, subscribe, hit that notification bell for new videos, and we'll see you in the next video. Peace.